Hello and welcome everyone to Gold Asset of the Day for the 28th of July 2020, presented by myself, Phil Carr, at the Gold and Silver Club. So as we go into a new week here, what an incredible week it has been so far with the precious metals. So gold prices, of course, have broken out to all-time highs here. So far up 26% in 2020. We've of course also seen silver prices now double off the lows that were put in March, from $11.50 per ounce all the way up to $23. In fact, silver prices so far this month are up 30%, and platinum prices in the latest 2 weeks now are up over 16%. In fact, we still remain in our platinum position, where we are currently up over 1,400 points, and 1,000 points is completely protected on that trade. It's been a phenomenal run that we've seen lately in the precious metals. However, there are some points to be aware of as we go into a new week here. We mentioned this on the week ahead commodity report, that you needed to watch out for the fact that we had an FOMC statement on Wednesday, and it's also the last week of the month. Therefore, you're very likely to get profit taking. What we're seeing at the moment is the dollar is also at a very critical level. The dollar has started to rebound here on Tuesday. A lot of traders getting FOMO have bought into gold too late. We've subsequently seen a sell-off after testing $1,980 per ounce, all the way down to $1,907 per ounce. Over a 700-point sell-off here in just a matter of a few hours over the Asia Pacific session. So many traders getting FOMO, buying in too late on the move, have then been taken out of their trades. And also the previous weeks here, as we mentioned, many traders were selling short into gold. They were selling at 1750, 1800, 1850, 1900 and so forth. In fact, just a week ago, over 70% of retail traders were selling into gold, trying to catch the top. And as a result, the capitulation now of those sellers and the subsequent parabolic move that we've seen on gold, that we covered in detail on the week ahead report, has happened. So essentially, many of the traders have been squeezed out their sell shorts. And also many traders that were selling the move have hedged their position by going long. And therefore we've seen this parabolic breakout, not only with gold, but also silver, of course, too, which many of you have capitalized on. But you needed to be mindful of the major news items that we had this week, which are events that can cause profit taking to occur in the market. So if you're patient, you wait for these profit taking events to occur, you then buy back in at much better prices, then capitalize on the next big breakouts here as well. Of course, still, we have some exposure here. I mean, platinum trade is just being a phenomenal run for us just within a couple of weeks, delivering the sort of trade that would take many weeks normally to get that sort of same profit on. And this is the case where you get these big parabolic breakouts. If you can catch the right side of the moves, you can get some phenomenal gains extremely quickly. We have seen hedge funds and money managers continue to build their net long positions in both gold, silver and platinum again in the latest week, whilst many retail traders have tried to catch the top, been selling into the market. They've just not been able to withstand a parabolic move like this to the upside. We haven't seen moves like this in gold and silver going back to 2010 and 2011. But with these parabolic run up in price, you also need to be mindful that we can get these very sudden pullbacks. So silver today has pulled back 10%. Gold today has pulled back 3%. And with these big sell-offs, especially going into a major news item like the FOMC statement, you need to watch out for that in terms of future monetary policy guidance. And we want to see what the overall rhetoric and narrative is going to be from the Federal Reserve tomorrow, whether they will remain accommodative with their monetary policy, which effectively would mean a continuation of quantitative easing. Any change in stance, this is where you could see the dollar get a bid, and this is where the precious metals can pull back further. But if we see the status quo is maintained, this is very likely where you've just got a temporary dip in the metals and we see the continuation pattern. Now, the dollar index here is also at a very important level. We're finding support between 93 to 94. The dollar is trading currently near 3-year lows. So you need to bear that in mind. And also the gold silver ratio. So effectively, if the dollar was to get a bid as we go into August, pick up momentum, then gold priced in dollars and also silver priced in dollars, this is where you could start to see a little bit more consolidation of the recent gains in price. But if the dollar was to roll over, break below a key level, which is the 3-year lows around the 93 level, and if it closes very bearish later on in July, if it breaks down further into August, well, this is where you see then gold propel all the way up towards the all-time highs again and essentially hit the Goldman Sachs target, which will be $2,000 per ounce. Now, add to that the gold to silver ratio, which is also broken down to 2-year lows. It tapped 75 to 1 just overnight. And of course, going back to the all-time highs of the gold-silver ratio, it hit 125 to 1 back in March. Since then, we've seen a big decline with the gold-silver ratio, and with that, a spike higher in gold and silver prices, effectively going parabolic, and it's been the best move with silver in over 40 years. So if you know what you're doing, if you've been following us at the Gold and Silver Club, gold asset of the day, silver asset of the day, you would have capitalized on these big breakout moves, but also you won't have FOMO'd in either, trying to get in right at the top, as many traders have done so, and then they've seen this big sell-off in the markets where, again, many traders just utilizing technical strategies alone, where they're not aware of perhaps major news items, the narratives that we're seeing right now, the usual profit taking that you get ahead of major central bank news items as we have on Wednesday, and the usual profit taking that you also get towards the end of the month too, which has been very prevalent in the market so far this week. If you're on top of all of that, this is where it's going to help you a lot to navigate the current market conditions with the metals, be able to profit fast from these trades and also protect those trades as well. So because then you have the capital available when you do get these dips in price in order to buy back at much more optimal prices rather than FOMO in, get trapped, and then you're having to manage a position at not optimal prices. Or even worse than that, you've been taught to use outdated technical indicators which have been showing you that the metals have been overbought for a while here, and you've been trying to catch the top and keep selling and just getting chopped up, which is what we're seeing day in, day out right now. Many retail traders, they're just getting absolutely chopped up with the gold and the silver breakouts that we're seeing. They either miss the whole move or they keep selling into gold and silver, trying to catch the top, getting chopped up, and just when they finally can't take it anymore, they decide to FOMO in and buy gold and silver. Of course, you see gold prices have one of the biggest one-day sell-offs that we've seen in months, and silver as well, dropping 10% in a day. This is why you need an edge in the markets. If you would like to learn a research-driven approach where you're not going to be just using 100% technical analysis, but you're utilizing a framework where you're taking into account much more data, market intelligence, and joining a community of successful traders, then just click in the link below today's report to make an application to become a member of the Gold and Silver Club. So with that, that's been Gold Asset of the Day, and of course I wish you good trading.